There is no shortage of online brokers fighting for your hard-earned money. And with commission-free trades being standard and most investments universally available across the brokers, there's not as much to separate one broker from another as there once was. The learning resources and research tools will vary from broker to broker, but I think that third-party websites like Seeking Alpha offer superior tools for analytics, and really we're just seeking a solid platform to start building our wealth. If you're planning on buying and selling stocks frequently and you want full control of each tax lot, I would suggest going with something like E-Trade, Charles Schwab, TD Ameritrade, Fidelity, or any well-established broker. However, I think M1 Finance is a perfect platform for a hands-off, set it and forget it, long-term investor. And don't tell the experts that I shared this secret, but a passively managed portfolio on autopilot, if set up properly, will outperform well over 90% of actively managed portfolios in the long run. And if you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Why M1 Finance? M1 Finance saves us from ourselves. After you set up your desired portfolio allocation, it's really difficult to screw anything up. And this is great for people like me who tend to tinker until I ruin things. After a simple setup, we'll just feed the machine with as much cash as possible, and M1 Finance will take care of the rest. After you create an account, you'll set up what M1 Finance refers to as a pie. Each pie must have a total of 100% allocated to it, and you can have up to 100 different slices, and these are your individual stocks or ETFs that feed into that pie. And buying a stock or an exchange-traded fund, which is commonly referred to as an ETF, is as easy as knowing its ticker symbol. So for example, if you wanted to buy Apple stock, you could go into any broker and start typing Apple, and you'll see that the ticker symbol for Apple is AAPL. And that's what you actually buy to become an owner of Apple. And it's the same concept for buying an ETF, an exchange-traded fund. Now, when you put, say, $100 into VU, you're buying a little slice of 500 different companies that will automatically be managed over time as new companies are added and old ones leave the index. So all you need to do is buy VU, and you get exposure to that index moving forward. So when you build your pie on M1 Finance, you can have multiple slices of a bunch of different companies or ETFs, or you could, for example, buy just VU. So the entire pie could have one big slice of 100% VU, and that would just give you exposure to the S&P 500. Or your pie can consist of a combination of ETFs and stocks. For example, you could have 5 equal slices, 20% each of Apple stock, Boeing stock, PepsiCo stock, and then maybe VU, an ETF, and SCHD, a quality dividend ETF. So you can get as creative as you want while building your pie, as long as each slice is at least 1% of a company or an ETF, and you have a total of 100% within the pie, anything's fair game. And there's so many ways to build your pie, but just as an example, a pie that's beat the market, that's beat VU for each of the last 10 years, would be 34% VU, 33% SCHD, and 33% VGT. How to open an M1 account. If you're interested in opening up an M1 Finance account, please check out my referral link in the description below. This can get both of us up to $100 free to invest. Let's dive into a screen share to cover the basics of opening an account. When you first arrive at m1.com, in the upper right, you're going to see a button to get started. That's the one you'll hit to initially create your account. You'll pick an email, a password, put in your basic information. This is just like creating an account anywhere, and I'll leave this up to you. I've already created an account, so I am going to move on to step 2. Hit the login button. When you first log in, you're going to be on the home screen. And this is just an overview of all the things that you can do on M1 Finance. We're gonna focus on the Invest tab. That's what we're doing here today. But step 1 before investing is to attach your bank account. So you can see I already have my Chase bank account attached to my M1, and this will say connect to your bank. So when you click this button initially, you'll use Plaid to connect it to your bank, and that will allow you to move money directly from your checking to M1 Finance. Once your account is live, it's pie time, baby. Let's go. After you log in, you'll be on the home screen. So head over to the Research tab and then click My Pies. You won't have anything here if you're a new user. So what you want to do is say, build a stock and fund pie. And you can name the pie if you want. This is whatever you want to call it. New pie, hi, guy. And you can give it a description if you like, whether it's dividend stocks or your ETF portfolio, set it and forget it, whatever you want to describe it as. And then the next step is to start adding your slices. So let's search for VOO to start, the S&P 500 ETF. So when you select VOO, if you want to add this one, you'll say add to basket. And then it'll be down here. You can hit add now, or you can keep working. For example, let's just pull up SCHD as well. That's a dividend ETF. We'll say add to basket. So it's in your pending basket down here. And then for our last one, we'll go with the growth ETF of VGT, and we'll add that to basket. So now you have 3 down here, and when you hit add, it actually ironically did this perfectly for us. But if you wanted to switch up your allocations, you could say I want 50% of it to be VOO. Say you want 30% dividends and a little less risky, a little less on the growth ETF. As long as these add up to 100%, you're good to go. If you had something like 25 in here, you'd be told that you need to remove 5%. So just make sure it adds up to 100, hit continue, and you officially have a pie. If you hit add to portfolio, it'll attach it to your portfolio that currently has nothing in it. So then when you go back to your home screen and you click your invest tab, you can click it here or here, you will see your pie. Here's mine, and I actually have an M1. This is more of a test right now that my best friend and I are doing. We're trying to see if we can handpick dividend stocks to ultimately beat the market. We started this in April. But yours will have nothing in it right now, but you will see the total allocation. So that will be VOO at 50%, VGT and SCHD at 20 and 30%. So now that your pie is built, the last step is for you to start funding it. And one thing that's nice about the pie system is that if a slice is underperforming, M1 Finance will automatically buy it at a discount because it'll get it back to its allocation. As one performs well and other ones are lagging, you'll automatically be putting more of your new dollars into the one that's behind. So you're buying the dip naturally as you get it back to its portfolio allocation. And that's why if you have a passive collection of ETFs over the years, you won't have to get in and rebalance very often. Now, if you're at the point where you have a really large balance and you're not putting in as much money at the moment, the slices could eventually get disproportionately high or low. And you can always use the rebalance option if you would like to buy and sell the stocks to get it back to its allocation. Now, this could have tax implications because you will be selling some stocks to ultimately buy the right ones to get it back in balance. The way that I like to use M1 is just to keep cost averaging in each week, and it will naturally balance itself out as it buys the dip. Now that you have an account established and you built your pie, all that's left to do is to fund this thing. When you're on the home screen, down on the bottom right, you'll see transfer rules. And you could see I put $100 into my M1 account on a weekly basis. And that's what you'll want to set up. Whatever amount makes sense to you. I recommend doing it weekly, and that just helps you truly dollar cost average in over time. I think weekly is a little bit better than monthly for that, buying consistently regardless of the market condition. So you'll go to transfer rules. And I have it set up already, so this is a rule right here, but initially you won't have anything on your schedule. So when you hit move money and you do a recurring transfer, you click there, you're going to select your checking account for from, and then your invest account into the new pie we built for the 2. You'll enter the amount, say you want to do $50 once a week. So you'll select weekly. I do Monday, it doesn't really matter, but let's just say you want to do Monday, and then you'll hit continue, and it won't let me do it because I haven't selected this stuff. And when you hit continue, that will set up this transfer rule on your rules. You'll now have this weekly $50. And from this point on, you're set up and you're good to go. M1 Finance automates the process of becoming a millionaire better than any platform I've found. After you set up your weekly contribution, you only need to log in once a year, if that, to maintain a well-balanced portfolio. Now, your next step is to do whatever you want. You're in the process of becoming a millionaire in your sleep. It really is that easy. If you enjoyed the video, please give it a like and subscribe and tell a friend about it. It really helps me out. It helps me get this thing growing, and I really appreciate you. Have a wonderful rest of your day, and I will see you in the next video. Peace.